It's a pleasure to have you on. I am Pius Kojo Baka. Let's now settle for the details. And Ghana's fiscal economy is expected to recover significantly this year as the budget deficit in relation to the size of the economy would narrow to 5.7% this year. That's according to Fitch Solutions' latest mid-year review of Sub-Saharan Africa. This means the outlook of the economy appears promising. There is more in the following Business Desk reports.
GHAMFIN said the narrowing of the deficit is as a result of the International Monetary Fund directed fiscal consolidation alongside the suspension of interest payments. It explained that the expected improved fiscal economy is underpinned by the restructuring of Ghana's domestic debt alongside the introduction of new taxes. According to the Bank of Ghana's May 2023 Monetary Policy Report, interest payments declined by 44.2% year-on-year in the first quarter of this year. But this was due to the freeze on external debt service payments since December last year. On key developments in Sub-Saharan Africa, Fitch Solutions said there had been a rise in debt service payments across key markets in the region. In conclusion, it said governments across the region are locked out of the international debt market and are facing increasing costs, especially if they are turning to more costly domestic capital markets.
One other stories we are following up for you. Traders are linking the high cost of imported items on the market to recent tax measures and challenges with the Ghana cedi. Now, the Ghana Statistical Service data on June inflation showed that the high cost of imported items was a major driver for the marginal increase in general price levels for last month. Many were expecting the cedi's margin stability to impact on prices of imported items. Well, President of the Ghana Union of Traders Association, Dr. Joseph Obin, says government's policy measures have not helped the situation. Thankfully, he joins us online, via Zoom, I should say. Mr. Obeng, grateful you could join me on Business Live. First off, now the concern is that when the exchange rate was unstable, traders kept increasing prices. Now, we have a fairly stable currency, but figures from the Statistical Service suggest that imported inflation is still high. What may be accounting for this?
Yeah, that is to be expected. I've always said that the inflation that we are experiencing here in Ghana is a consequence of inflation. If you look at the cost items that one is made to pay even at the port alone, the exchange rate, the interest rate, the cost of borrowing, all compounded into cost that we pay, then of course you do not expect anything than the inflation that we are experiencing. You see, the multiplicity of taxes that we pay, the high rate of taxes that we pay. And that's what businesses have been saying all this time. It does not make us competitive. It does not help us to reduce our prices to the consuming public. And it hurts the economy at large. And this is all that we've been saying. So it is to be expected. Because cost of doing business still keep going up. The benchmark reversal did not help matters. The VAT, it used to be 3%, if you recall. Now it has gone to the standard rate of cumulatively about 22%. What do you expect? Something from 3% to 22%. So if you want inflation to come down, then we have to prune down most of these costs of doing business that are embedded in the taxes that we pay both at the port and then the income tax, the VAT that we pay at the trading areas.
It's important you've mentioned taxes. However, the question is, what is its impact on importers and, of course, traders?
That's exactly what I'm talking about. If the prices of goods and services go up, it means that the purchasing power, because now inflation is up. If inflation is up the way it is, it means that the purchasing power of the final consumer is affected drastically and it has reduced. And if that happens, it means that they are unable to buy the volumes that they buy, and then it curtails our turnover, which is the major drive of business. If there's no turnover of business, then businesses are on the verge of collapse. And this is exactly what is happening to businesses. The consuming public is being unnecessarily punished. And for that matter, they can also not patronize much as they could have done for us. And so it has become a vicious cycle. And that's the earlier we do something about inflation, interest rate, and the exchange rate. The exchange rate, you say it has fairly been stabilized.
Yeah.
But we want long-term stability. Not that it goes down small for a small period of time, then it goes up again. It does not ensure price stability in the market as well. And so we have a lot to do to bring down most of this. We have to sit down, evaluate most of these costs. In fact, it's important that we enhance on revenue collection. But it's also important that we do not put all on just a few of us to pay. That government have to be innovative to expand the tax net. And that's what we have been saying. There are more room to be done. And then also government expenditure should come down drastically, because we are not in normal times for government to do the same old thing that they were doing during the good times. Now that we all recognize that we are in a serious position, then of course we also have to work on expenditure so that it will give us the space. If the expenditure is not reduced, it means that we have to go and find the revenue from the same dying companies. But then if the expenditure is reduced, then there's a space for us businesses also to grow. Because I believe that the economy should be revamped positively, and that the drive should come from the private sector. So if the private sector is in a way that is being killed or suffocated, then of course some of these things is going to be repeated, the inflation rate going up and all that, and thereby also affecting businesses and its competitiveness and all that. Yeah.
So it appears each and every time we have discussions on revenue mobilization, taxes, and of course ensuring that we have a buoyant private sector growth, these concerns come to bear. But what do you think could be the reason, for which reason government is being adamant in ensuring that some of these loopholes are addressed from your perspective?
Because maybe we have not adopted prudent and pragmatic and efficient tax systems in place. Otherwise, we don't have to still be putting taxes on us, because even the taxes that we are paying now are enough if we have efficient ways of collection. But we do not have the efficient ways, and that we do everything just like that. And then when we are not getting the results, then the only option is for us to add up new taxes. It doesn't help like that. And that's why the taxes are not being paid, and or compliance is not being adhered
to. Yeah.
Because the taxes, if you get revenue, it means that there's a lot of compliance in the system. And then if taxes are so high, it means that it reduces compliance. We said that we have a tax to GDP in the sub-region. Ours is the lowest. Yes, it's the lowest, because the tax that we pay in Ghana is the highest among the sub-region. And then the number of taxes that we pay is also more than the taxes that our counterparts in the other countries are also paying. It means that the affordability of their taxes have ensured compliance in those countries, and ours is being impeded. And so the simple fact is that we all have to sit down and evaluate some of these things. If government become adamant, like you said, on some of these things, then we are not making any progress anywhere, whilst government succeeds in crippling the growth of businesses. But I don't think it's the intention of government to cripple the growth of businesses. Because if you bring 1D, 1F, 1D, 1 district, 1 factory, and they are not able to be competitive, they are not able to sell the produce, what have you done? Because of a high rate of taxes, that does not make it competitive even to sell to Togo. You have done nothing. You have been giving subsidies to these companies, and all that we can do is to lump up taxes on them. It means that our industrialization drive is not being done in the proper way. And that's what everybody also think about, that we have to industrialize so that we can increase our productivity. But you cannot overprice industrialization. And this is exactly what we are doing. By putting up so many taxes means that we are overpricing our industrialization, the produce that will come out of our industries. So what are we doing? If your produce is not competitive, then we have, so the whole thing, because the government itself recognized this. That's why when they come on 2017, they said that they are taking away those so-called nuisance taxes. And then they did that, and then now the nuisance taxes are creeping back in force. Just imagine the COVID levy. It is of no essence, because the COVID itself is no more there, and then there's no precedent even in the world that when this pandemic that came to collapse businesses, countries were made to levy taxes on the same pandemic. Doesn't make sense. And now it's not there. The special import levy is still hanging on this. It came during the previous administration for a temporal relief for government, that they will use it, and then after the sunset. It means that the sun never got set, or what? It means that they take businesses for granted. Because the COVID levy is a one-purpose levy that came, that we use it to support the COVID management of the COVID. And now COVID is out of the table. Do we still have to keep it on the table? It means that we do not think about the welfare of businesses, and even to the large extent, the welfare of the consuming public. This is exactly what is happening. So we have to sit down and be able to evaluate the so many costs of doing business, both at the port and the taxes that we pay, the values of it, trying to make it manageable so that the effect will help the growth of businesses and also give respite for the consuming public and help the Ghanaian economy at that.
All right, so we do know in the coming days, the finance minister will be presenting the media budget review. Your expectations quickly?
Yeah, that will bring mitigating measures. Because going to IMF means that there are so many conditionalities that is going to hurt businesses. And we all know the 3 taxes that was introduced, the effects of the exchange rate, the last quarter of 2022, which made businesses suffer and all that. The other measures like the benchmark reversal policies and all that have made doing business very extremely difficult. And so at this point, when we want the growth of businesses, because we have succeeded getting the IMF, what we have to think now is to make sure that businesses have the space to grow again and revamp the economy. This is the only stage that we are now. Otherwise, if you do the things that we have been doing and keep on doing it, it means that we will succeed collapsing businesses, and then the whole economy will be at stake.
All right. Thank you very much, Dr. Joseph, for your time. He's the president of the Ghana Union of Traders Association, speaking to us there. I remind you, you're still watching Business Live here on the Joy News channel. More after this break. Hello, welcome back. The Ghana Microfinance Institutions Network is calling for a more robust structures to cushion the industry to withstand shocks. The network said it has observed with concern how some financial institutions are struggling as a result of the domestic debt exchange program. According to its executive director, GHAMFIN, a collaborative effort from the regulator and various stakeholders would be key to support the growth of the sector. He spoke to Joy Business at the 13th annual general meeting of the Ghana Association of Savings and Loans Companies.
I'm thinking, looking at the rural communities where there are no banking infrastructure, those areas also need to be touched. But if you move across most of the rural communities, you find a rural bank in a district level, 1 or 2 microfinance, and then beyond them, you don't find any financial institution. So in our estimation, we need to cover all those grounds and make sure we give them the kind of product that they also need. But the other side to it is that you also come across areas where you have 1 or 2 institutions, but they are limited in terms of products that they offer to those communities. And so we expect that they should have a range of products that they can also tap from it, so that they can all make what you call informed choices in terms of financial services and products. I think it takes all of us to come out to develop the infrastructure base. When I talk of infrastructure base for the financial sector, it's becoming clear to everybody that we don't need the physical structures as we see them over the years. There are some spaces that you need, maybe an agency banking platform, a mobile vendor, or any of the groups that can be used or done at a relatively lower cost, so that you can have it at those places to attract more people. But of course, there are some that also depends on the kind of telecom networks. And if they are not in those areas, you cannot use it that much. So all those gaps needs to be looked at carefully so that we can all move on as a nation.
More within the space, and financial institutions are being urged to shorten their loan tenure to clients to guard against being trapped by liquidity. Chief Executive Officer for Central Bank, Michael Edu, says the domestic debt exchange program and the economic downturn demand such measures to keep financial institutions in profitability. He also encouraged review of investment policies to the short term. Nana Yaojima has more in this report.
For implementation of the domestic debt exchange program, there have been concerns about the current macroeconomic situation and the negative impact on the banking sector. The identified impact included declining profitability, increased pressure on banks' solvency and liquidity. Though the Ghana Financial Stability Support Fund has been established with 15 billion capitalization, it is expected that financial institutions find their own measures to stay in profitability. Chief Executive Officer of Central Bank, Michael Edu, is suggesting banks review their loan and investment tenure to ensure they stay liquid and operational.
We are aware of the domestic debt exchange program recently embarked on by the government of Ghana that has put a lot of stress on the financial institutions. And so strategically, financial institutions will be liquidity trapped if care is not taken, or if plans are not put in place to boost liquidity situation of banks. So one of the things banks can do is to relook at the tenure of their loan facilities. Giving out loans for too long a time or a period, they can decide to shorten the duration of their loan facilities. And they can also decide to invest in short-term investments that will ensure free flow of funds or liquidity, so that banks will not be liquidity trapped.
Despite the difficult financial year, the Central Bank is improving on its mandate of mobilizing excess funds to support SMEs through loans. Board Chairman Dr. Noble Francis Dente says the bank has also enhanced its corporate social responsibility programs.
Part of our corporate social responsibility, we try to help our community, particularly in the area of education, health, security. There are several initiatives that we have embarked on.
Meanwhile, the bank has renovated a 6-classroom block at Akrowa DA Primary School.
We have also identified that there is more support that they will need, and so we've made commitment that we will go ahead and also support them with respect to the other buildings. We are going to help them renovate all the other buildings. And as I said earlier, in Chi, we will implore them to ensure that they take good care of what we have offered them. So,
for Joy News, Nana Ojima reporting.
Now, Chief Executive for the Maxwell Investments Group, Dr. Maxwell Ampong, is urging business leaders to set up training programs for their human resources to promote efficiency in their various sectors. According to him, this can be done through partnerships, which will ensure an effective education to build the local economy. Dr. Ampong was speaking to Joy Business after a short ceremony to announce a collaboration with the GHAMFIN Group to train some supply chain professionals.
Necessarily the community inhabitants, the typical community inhabitants here. We have industry leaders, we have company executives, we have even a representative of 3 embassies here who are to have a taste of what's to come, so that when the project goes into full gear, they will be able to translate or to be able to transmit the message of what we are trying to do with the KNUST ASON program much more accurately, which is that under the SDGs and under AU Agenda 2063, education is very much highlighted, and we are trying to do our best as suppliers of impact products and impact services to be able to contribute materially to these two agenda. And in a normal daily activities, logistics, supply chain forms a very big part of it. So that is why we chose the topic of logistics management and procurement and supply chain as the topic for the first training session, which is currently ongoing. And just as you heard from the lady from Jospon, our partnership is going really great. We believe that no one is an island. We don't want to reinvent the wheel. They have done so well as a group. MIG is an up-and-coming company. We are Ghanaians. They are Ghanaians. We feel like together we are bigger than the sum of our parts. So we are very happy about this partnership, and we are hoping that this is the beginning of more to come.
Thanks so much for watching Business Live with me, Pius Kujobaka. You can get business stories when you log on to myjoyonline.com/business. I leave you with some international business.